Oil prices eased overnight as mediators worked to bring the U.S. and Iran back to the negotiating table and prevent the latest round of fighting from escalating further. Well, futures fell around 2%. We've got Brent crossing $76. We've got WTI at $71.80. U.S. crude earlier registered its biggest daily gain since the 1st of June on Wednesday. Let's check in now on the Asian market open. We've got the Nikkei 225 up 1.5%. It's mirroring overnight gains on Wall Street, up more than 1% in early trade. The ASX 200 marginally lower, with New Zealand's NZX 50 closed for a holiday. South Korea's benchmark index building on yesterday's gains, supported by chip heavyweights Samsung and SK Hynix. We've got the Kospi jumping 3% and Samsung up 2.3%. SK Hynix higher by 1% in South Korea. That's ahead of its U.S. debut later tonight, which could be the second largest share sale in Wall Street history. The company has priced its American depository receipts at $149 each to raise $26.5 billion US dollars. Reports say demand was more than 7 times the available shares, underscoring huge investor appetite for a pivotal company in the AI supply chain. It lost ground in Seoul in recent weeks alongside a global sell-off in tech stocks, but it's still up more than 220% year to date. And to give us a preview of what we could expect with SK Hynix's U.S. listing, we've got Mehdi Hosseini to give us analysis, senior equity research analyst, that is, at Susquehanna International Group. Mehdi, appreciate your time today. So we've got the pricing now. We know it's several times oversubscribed according to reports. But this is happening, of course, at the time when it's been choppy for memory chips in the market. So what's your sense of the investor appetite for this listing? And are they looking at fundamentals, or is it just a matter of getting into the AI trade?
Thanks for having me on the program. I think the oversubscribed factor in this IPO is very typical, especially the tech IPOs typically are oversubscribed. But I'm not sure if there is a sustainability with that higher demand for the shares. And it ultimately is the fundamentals that matter. There are other names like Taiwan Semi that they have an ADR listing. And there is a slight difference in valuation in US versus Taiwan. And I think that should also apply to the shares of SK Hynix. Now, looking forward, obviously, memory demand has remained strong. That has led to 200 to 300% increase in the share price. But we're at a very critical point in the memory cycle. These memory manufacturers like SK Hynix have already started to plan for wafer capacity. Their capacity plans are beginning to increase. This is a multi-year project. But what is most important is the margin profile. We have never seen 80% plus gross margin profile for these memory names. So the question is this sustainable? Or if we're going to have to normalize, what is the real normalized margin level? Because sustainability of this margin profile is questionable, and we don't really know how it's going to evolve in the next year or two. And I think to that extent, the shares are going to have a more difficult time in setting new highs. I think the shares are going to recover recent losses. And perhaps if you look at my price target for SK Hynix and other names, there could be a 40 to 50% upside from here. But it's going to be a grind. It's not going to be as easy as past 1 or 2 years.
All right. With sustainability of margins in question, as you pointed out, Mehdi, do you recommend investors buy into this U.S. listing of SK Hynix right now?
I have a neutral rating on SK Hynix. The company has done a great job. They were actually a leader in HBM, but I think there is going to be a downtick in their HBM market share as we migrate to HBM4 that is used next year for next-gen AI server platform. I think Micron, which is a net share gainer in HBM4, offers a better risk-reward profile. And to that extent, that would be my preference between the several DRAM manufacturers. So I would favor Micron over SK Hynix, primarily due to the share shift in HBM market.
I see. And so you prefer Micron over SK Hynix, but right now, ahead of this listing in the US, we saw the stock moves really choppy in the past few sessions. And we know that they're raising money. These companies are trying to increase investment into new factories. How important is it for SK Hynix in particular to list in the US, to tap into another set of investors, and to be available there?
Very good point. I think they need to improve the disclosure. They need to offer investors in US and Europe a greater visibility into their operation, greater visibility into their mix, and they need to have a more consistent way of communicating to investors. Perhaps I could be missing something. Perhaps SK Hynix may have not lost market share, but it is on them and their communication during the quarterly earning to better educate us, because the dynamics of the shareholder base is changing. The requirement by US-based investors is very different, and to the extent that the company could improve their communication, that could be a huge positive.
I see. Mehdi, I want to touch on your point about how you think, it's all about HBM4 now, moving on from HBM. You talked about Micron. And again, they're all increasing their investments. There's huge demand for these AI chips. What is the path ahead like for the memory sector? Do you think that we will go back to the boom-bust cycle that we saw earlier? Or do you see continued squeeze in availability of these chips?
I see AI investments sustaining for another 16 months, so another year and a half. AI investment is going to be strong. I see a industry that is less of a boom and bust and less volatile, put it this way. But what we don't know is to what extent commodity, non-AI memory prices are going to evolve. I believe that the commodity memory prices are beginning to peak. That segment of their mix actually has a higher margin than HBM. And we just have to figure out what happens if non-AI memory prices were to moderate or to actually show a decline. We don't know how margins are going to evolve given this mix shift. So AI remains strong. It's a non-AI mix that could create volatility. But back to your point, there is definitely less volatility in the annualized earning. There is less of a boom and bust cycle, but we need to figure out what is the normalized margin, and that normalized margin depends on the mix, which has yet to be determined.
Mehdi, always insightful to have you on. Appreciate it. Mehdi Hosseini there, Senior Equity Research Analyst at Susquehanna International Group.